Tesla's October 10th event is right around the corner, and something very unusual is going on with Tesla's options. There's a whole lot of money to be made, and in this video, I'm going to explain to you the unusual call options that I'm seeing on Tesla stock and how we can use that to make a lot of money ahead of the event. So first of all, check out this clip.
Welcome back to Fast Money. Tesla showing some sparks of life, surging nearly 10% this week and far outpacing the rest of the Mag 7 stocks. The stock is up 21% in September, its best month since June of last year. And gains come ahead of Q3 delivery numbers coming next Wednesday and the highly anticipated robo-taxi reveal coming almost a week later. Mike, I know this one's in the infamous or famous, however you look at it, Holly Index. You drive one. What are your thoughts on the stock's move here?
Yeah, she drives one. I do not drive one,
you
but
watch her
she drives one.
All right.
Yeah, well, sometimes I drive it, I guess. We had a couple of them at the end of last year. We have only one of them now. Yeah, I mean, this is always one of the busiest options around. It was the second most active in terms of call volume today, behind perennial front runner these days, at least, NVIDIA. But of course, it's a higher dollar stock price, so the difference in the contract quantity between the two is not as big as it might first appear. It traded almost 1.5 million call contracts versus 1 million on average per day. And to think about how big an increase that is, 400,000 plus contracts over the average daily volume. The third place name is Amazon, and that only traded about 440,000 call contracts in total. So, when you see this kind of an uptick, it is meaningful. I mean, options traders are playing basically in Tesla and NVIDIA exclusively, it seems like.
Yeah, a lot of the analysts are getting more bullish going into the delivery numbers. Wedbush just today saying that they see upside to consensus numbers and that China is actually going to be a positive driver for demand. There's favorable financing and leasing terms there that could really help it boost sales.
There's definitely been upgrades. The China news this week, along with all the other China news, but it was Tesla in China that was coming through. They've got this 1.99% 6-year financing, which has to be supporting. And the bears are going to say, what happens without that? And I've also seen some pretty clear divergence between buy side and sell side on this. Buy side is actually a little bit more pessimistic. Let's see where we go.
And if you look at Rivian's charts, the inverse of Tesla's charts. So Tesla is truly moving on China, robo-taxi, everything's been pushed off. The whisper number is higher than the streets number usually is. But if they blow that number out, people are still going to be scrambling to chase this one. Remember,
blow it out, meaning in a good way?
To the upside. Okay. And remember, it's true. GM scrapped their robo-taxi plans. Mm-hmm. So realistically, it's Waymo and it's Tesla. And if Tesla could keep that momentum going, if we waited this long, if it's an exciting reveal, then the stock can go higher.
Guys, they said 400,000 contracts over the daily average. That is a whole lot of volume, and there's a lot of high demand for call options on Tesla right now. So I'm going to be opening up my screen, and I want to show you the trades that I'm going to be making in the morning. All right, so look, right now the 400,000 contracts are way above average, which is an insane amount of volume, and essentially option traders are basically just trading Tesla exclusively, and they're very bullish, and this is unusual option activity. I have been in Tesla for a long time. Tesla, I put credit spreads. Let me open up my Tesla position right now. I'm on the journey to make my portfolio $4 million. I am growing it pretty quickly, and Tesla has been a very interesting stock to trade. I have iron condors, which are not at danger yet, but it's really interesting because selling puts and put credit spreads has been very profitable, but my iron condor is currently in danger. So I'm just being honest. I'm showing you my wins, and this is not necessarily a loss, but I may think about actually closing out this trade for a loss. Now, look, I see upside to the consensus numbers, guys. I also have spoken to several Tesla employees, as I am a one-on-one coach, and basically I work with a lot of engineers, doctors, medical professionals, dentists, and I have several people that do work at Tesla. So I've heard a lot of very interesting information. It's all pretty much publicly available, but I think that the engineering team is top-notch at Tesla, and I see a lot of upgrades coming in for Tesla. So there is a whole lot of bullish momentum. If we take a look at the 3-month chart here, the stock's up 30%, and in the last month alone, this stock has up over 25%. So what I would be doing right now is I'm going to go to Tesla Trade Options, and something that I don't usually recommend on this channel, but I'm actually going to say that if you have a higher risk profile and you don't mind buying options, which means that you could lose your investment, I'm being very clear with you, I prefer option selling. I'm going after safe, passive, consistent income for retirement. That's where I'm at. I'm young, but I'm at retirement, and that's the type of person that I work with. I work with folks that have 50K on the lower end of things, maybe 30K on the very low end of things, and into the multiple six figures, and I work on scaling portfolios to seven figures. That's mostly through option selling. Option selling is a lot more lucrative and profitable. When I was working at Goldman Sachs, I've done the research, I've seen all the studies, I've seen dozens and dozens of studies. Options are typically overpriced. There's too many people buying them, not enough people selling them, and you get compensated for basically selling options. So I prefer that, but with Tesla, I think that the risk to reward ratio here is very smart. If you're a more aggressive investor and you have a higher appetite for risk, I would be taking a look at several different expirations here. Specifically, October 11th would be the shortest expiration date that would capture in the event, right? The event essentially that robo-taxis, we're going to get a lot of data there. Q3 deliveries, we have a lot of stuff coming from China, the financing for Tesla. Tesla has a lot of strengths right now. Has a lot of strengths, and this is a cyclical stock that goes up and down depending on investors' emotions, right? So when the herd says, "Hey, let's run for the hills," people sell out of Tesla and the stock doesn't do too well. Right now, there's a lot of traders that are saying, we want call options. There's a whole lot of demand, which means that there's a lot of bullish investors. So what I would do is, if you want really short-term, highest level, I'm gonna give you three different trades, okay? I'm gonna give you the high level of risk, medium level of risk, and then option buying doesn't really have low levels of risk, but I'm gonna give you the lower level of risk, okay? So let's kind of get into this right now. So October 11, you can just simply go for a call option that's a little bit out of the money. 265 would be fine. You can buy at 265, and basically you would need Tesla to explode up, which, to be honest with you, looks kind of likely right now, right? So this would be a position that I would say put no more than 3% of your portfolio into. If you have a smaller portfolio, this is a good risk to take because, well, with a small portfolio, you need to be more aggressive. Nothing wrong with being slow either. You probably want more aggressive returns if you have a small portfolio. If you have a big portfolio, just allocate a very small amount into this. I think that this is a intelligent play, but for a really big portfolio, no more than 1% should go into buying call options on a single stock like Tesla here, for example. All right, so that would be the first play. That would be, fairly aggressive. The next play is I would actually capture the event that we're going to have on October 10th, as well as give myself some extra time, because when an event happens, typically there's a quick reaction, but then there's an after effect, okay? That we see that all the time, and I've studied this in college textbooks when I was studying finance. Typically, event happens, that's good. We get a big spike, and then you get a little bit of a continuation of momentum, and that could take 1 week, 2 weeks, 3 weeks. Okay, I'm not a genie, I can't predict what will actually happen, but typically it's 1 to 3 weeks. So given that, you would want to go for the November expiration. Okay, so taking a look here, you can buy a call option, and if you want medium risk, I would have a little bit more exposure into Tesla, a little bit of a higher delta. You can go for this right here, 260 call option. This would be slightly in the money. You do need Tesla to move up a lot for you to actually break even. You need Tesla to go up to $286 per share. This is actually why I don't really like buying call options, is because you need a pretty big move in a pretty short amount of time. But again, I think the unusual option activity right now supports taking on a risk like this, right? Because this is a risk that if Tesla goes to $300 per share, you can end up getting paid off pretty well, over a 50% return. I'm getting that math because you take 300, you minus the strike price of 260, that's $40, and the price to get into this option is $26. So you can turn $26 into $40 if Tesla goes to $300 per share November 15. Now this would be an over 10 to 15% rise. So again, this is still a high risk play, but again, for call option buyers, if I was going to recommend something, which I haven't really recommended much call buying in all of 2024, this would probably be it. All right, so let me give you the third play, the safe trade, which I personally would prefer. These first two trades that I've told you so far are going to be put into that option gambler category. Now I want to give you the safer option buying category, which again, as I've mentioned many times, and I'm being very clear with you, option buying is very lucrative in that you can double your money, triple your money. It's also very dangerous. So please be careful. All right. What I would do is I would really reduce the risk and I would buy a call option at 265 and then I would sell a call option to basically make my break even a lot easier, and I would also reduce the cost of this option in general. So this would be a small account trade right here, which would be suitable not just for small accounts, but for big accounts looking to not have that much risk and exposure, which I would really recommend. So 265, you sell a you buy a call option, excuse me. Delta here is 0.53, right? It's very high delta. And then you subsidize the cost of the call option that you're buying by selling at 275. Now this is called a call debit spread, or I prefer to call it the bull call spread. Okay, so this is a bull call spread. Given the huge volume of trades being made right now on Tesla, there's a lot of liquidity. That means liquidity is a good thing for getting your option filled and not losing that much money to slippage cost. Slippage cost is basically the difference in the bid and the ask price, okay? So you're gonna be saving money on the slippage cost, okay? You're gonna get good volume, good execution, and essentially by buying the 265 call option and selling the 275 call option, you can see here how you're really not putting up that much capital. You're only putting up about $400. And now putting up this $400 actually gives you a potential return of $1,000. So you can turn $400 into $1,000, which is a 2.5x return. I like this trade a lot because I don't personally think Tesla can go to $300 per share. It's possible, but the chances are obviously pretty low, right? But on a bull call spread, isn't it crazy how you get more return than just buying a call option? You get more return on a bull call spread with less capital, okay, by buying the 265, selling the 275. Tesla doesn't have to go to 300 for you to get a 50% return. Tesla has to go to 275 for you to get a 250% return, right? Or 2.5x, whatever that percentage return is. You get what I'm trying to say. You can 2.5x your money if Tesla moves up by like 5%. Basically, it's like a little bit more than 5%, 5.5%, if I'm doing the math in my head correctly. So this is a fantastic return. Given unusual option activity, I think that there is, whether people are trading on insider info, I'm not going to speculate. I don't know. I don't have insider info. I keep everything very clean, pay my taxes, etc. But whether there's activity from insiders actually having insider data and activity that they're capitalizing on, or whether it's speculation, or whether it's just retail investors kind of wanting to make a once-in-a-year opportunity bet, whatever the case is for this increased option, unusual option activity, I would say that it is smart to take a look at and take into consideration, because it's unusual, meaning that something suspicious might be happening, which could be a very good thing, right? In this case, right? So suspicious activity doesn't have to be bad. Suspicious activity can sometimes be good. It's like if your fiance wants to propose to you or whatever, you're a man, you want to propose to your woman, and she keeps hinting at wanting, I don't know. You get what I'm saying? There could be suspicious activity to a proposal. You see that stuff on social media. So anyways, this is the play that I'm going to be looking at specifically. I'm just going to put a small amount of money to work with a call debit spread or the bull call spread with a small amount of capital to, give a trade for, smaller traders looking for more aggressive growth. So if you want more aggressive growth, I think this is a really smart play. Otherwise, I would stick to my bread and butter strategies of selling puts and covered calls. Let me actually show you what that looks like as well, because I'm personally, although there's unusual option activity on the call side, and we probably might get a rise in the stock, that's still very viable for you to just sell put options and get in, which is my bread and butter strategies, right? My bread and butter are the top 3 strategies that I have. Sell call, covered call, specifically, you need to have your shares. Sell puts, which is my best strategy for retirement income. And then the wheel strategy, which is the combination of those 2 things, which is essentially just selling options for income. And the wheel strategy is something that I've been using for almost a decade, right? Ever since I learned about this strategy, ever since I kind of developed this strategy myself, I've contributed to the strategy. I haven't come up with the wheel strategy. It's not mine, guys. And it's been proven to make money over decades and decades of research and people trading for a living, obviously, but I've contributed to the strategy in my own way by looking at specific deltas to trade, specific processes on how to implement this strategy. So my implementation is second to none. I've been doing this for a decade, but I've been trading the wheel strategy for like 7-ish years. So anyways, that's what I do in my one-on-one coaching. I want to implement the correct strikes. Let me just show you an example right now. I'll show you very quickly, right? I want to keep this video fairly short. So sell put. Look, I would sell a put for October 11. This is very low risk. Now, I've done my research on technical analysis and fundamentals before I'm making this video. For me, I think Tesla has a very, very good, strong support at around 235, 240. So just to be extra safe, because there is increased heightened volatility, at 85 freaking percent. That's insane. 85%, guys. That's very high. I would just go safe than sorry. I would go for a 23 delta option here. Typically, I sell puts around 30 delta, but here 23 makes a lot of sense. For me, I want to go a little bit lower on the risk. Bid ask is very good at $5.95, and the ask is $6.10. Okay, applied volatility off the chart. So this is the time right now to collect income. Okay, this right here represents, if you were to sell an option here 12 days out, this represents roughly 2%. Actually, excuse me, this is roughly 2.5% return, safe and passive. Open the position, just hold it till October 11 expiration. Worst that happens, you get assigned, and if it doesn't go to 235, great, you just got paid. But you get paid either way. You get paid whether you get assigned or you don't get assigned. As long as it stays above 235, you obviously won't be assigned. If it goes to 235 or below, you will be assigned on October 11 of expiration. If you don't want to be assigned, obviously you just close out the trade, which I don't personally recommend. If you're selling puts, you want to have cash to buy the stock, and yeah, that's the way I prefer it. So I would sell this right here when the market opens up. I will be selling puts myself with a lot of my capital because I'm very confident on this type of trade. This type of trade, I can really put my money where my mouth is and really open up a lot of shares. I really don't mind going into Tesla because I think the innovation, the brand is very strong. Leadership is strong. A lot of good stuff is happening right now. We see a lot of information from China giving, favorable loans and subsidies, stuff like that, which really helps out, the consumer to purchase more of these vehicles. So yeah, I would look at 235 sell put for October 11. Now, if you want to really have that safe passive income, you can go ahead and let me show you one more trade. You can go ahead and honestly, just go for January. Just super simple, right? I like simplicity. I want a simple way to make consistent, reliable income. I don't want anything crazy or complicated. So I want to make money without having to stress about it. So I would go down. You can see here how this is expiring January 17. You can go a little bit lower. You can go something like 220. You can see how the delta here is still 23 delta. The implied volatility has decreased because, well, we have a short-term spike in volatility due to the event. So you can see how volatility is actually lower going out into January. But hey, the return here is very, very good. I mean, this is over a 5-6-ish% return. Actually, it might be even closer to 7% return. And you have to tie up a decent amount of capital. But hey, it takes money to make money, to be honest with you. Obviously, that's very logical and clear. You're not going to lose the $20,000 that I'm showing you on the screen. This is just the max loss if Tesla went down to zero, which is not going to happen. So anyways, this is a really good trade. And this is it's a very high income trade. So I would take a look at some of the things that I told you in this video and let me know in the comments down below what you will be doing. And as always, I appreciate you guys for watching the video. Please subscribe and I'll catch you guys in the next one.